But IT stocks were some of the big gainers last week, and to discuss the outlook for the sector from here and some individual names, Sundheer Guntupalli, the lead analyst technology at ICICI Securities is with us. Sundheer, good morning. Before anything, I wanted to ask you about Tech Mahindra and the latest acquisition that they made. Put together, this is 7 acquisitions that Tech Mahindra has made in just this fiscal in FY22. What is your view now on the stock, and how are you sort of approaching it as we head into the next earnings season?
Sure. Good morning. Thanks for having me here. So this acquisition, we see it as a good acquisition. If you look at on a trailing revenue basis, I think this is acquired at around 1.5 times EV upon sales. And the area of interest, this is the area of interest for many of the IT companies, which is into customer experience management, so on and so forth, especially from a remote work standpoint. So from that perspective, I think this is a good acquisition. And apart from just Tech Mahindra, we think in the near term for the IT sector, the earnings trajectory should look strong, and even we expect a similar trajectory for the stock prices also because of whatever uncertainty we are seeing around. I think IT sector stands to be a key beneficiary, especially in the near term.
Sudhir, good morning. What about the big ones, Infosys, TCS, Wipro? I mean, how's your pecking order looking like as we head into the new year?
Sure, Anuj. So across the large caps, we prefer Infosys and TCS because as I've been highlighting that one of the key side effects of COVID has been the great resignation theme. And especially developed countries are struggling to find tech talent. So there is a higher emphasis towards offshoring tech jobs towards India. Now, had COVID receded with vaccinations in time, probably this trend too would have receded. But that is not happening. Even before Omicron has come into picture, we have seen increasing number of cases, increasing number of hospitalizations in Europe, because of which there are return of some restrictions. And that will give further impetus to probably this great resignation theme for some more time. Which will in turn lead to higher offshoreization demand. This is on the revenue side. Coming to the cost side, most of us are expecting, had you asked me a couple of months earlier, we would have expected that some of the discretionary costs like travel, office costs, etc., would have returned by end of this fiscal. However, in the current scenario of Omicron and return of some of these restrictions, probably that may also get delayed by 1 or 2 quarters, which means that the earnings trajectory, near-term earnings trajectory of IT sector is now looking brighter than what it was looking probably a couple of months earlier. So from that standpoint, there are stocks like Infosys and TCS, which we expect to do well. In some of the cases, there are also some technical support factors like, let's say, impending announcement of a buyback, so on and so forth. And in the mid-cap space also, of course, valuations are bloated in certain areas, but some of the stocks like Mphasis and Cyient, for instance, they have valuations kind of corrected quite a bit. Without a meaningful change in the situation of fundamentals. And as I said, whatever uncertainty is around, in the times of uncertainty, IT sector should do very well because here there is not so much of demand or supply disruption that most of the other sectors will do, probably because of Omicron or because of the increasing number of cases in Europe, so on and so forth. Nevertheless, there are some stocks which have seen recent correction like Mphasis, for instance, or Cyient, for instance, in the mid-cap space. That is what we prefer. And in the internet space, if I were to extend a little bit, probably InfoEdge looks like a good idea at this juncture.
Sudhir, hi, good morning. You've been slightly cautious based on valuations, right? On the space and stocks under your coverage. Where does that stand? I mean, are you comfortable, a little more comfortable now? Second, once every while you hear somebody bring up the fact that interest rates are going up, and that's bad for typically tech stocks, long duration stocks. Does that apply in the Indian context at all? I mean, these Indian IT services companies are some of the most highly profitable companies. So should we pay any attention to that thesis at all? Go on.
Yeah, Prashant, that's a great question. So if you actually look at many of these global tech stocks, right, which are currently not profit making or where investors are kind of giving exorbitant valuations with the expectations of future growth, high future growth, etc. Mathematically, what happens is when you are betting so much on future growth or long-term growth, when you are discounting that long-term growth at a higher interest rate, obviously the present value goes lower, and that's the reason why you see whenever there is a talk about increase in interest rates, you will see very negative reactions from some of the global tech stocks, where a large growth premia are assigned by investors for future growth and long-term growth. But you need not necessarily correlate it with Indian IT stocks, because Indian IT stocks, first of all, investors are not assigning such a growth premia that they are assigning to, let's say, something like a Snowflake, so on and so forth, which are trading at 50, 60 times on a price to sales basis. So Indian IT stocks are nowhere close in terms of the valuations. And even we are looking at, because they are profitable, we are looking at near-term growth also, and near-term earnings potential also. And on your other question about the caution on the sector, so two things have happened. First is, when we were thinking that this COVID is kind of receding because of vaccination drive, so on and so forth, but that doesn't seem to have happened. So now there is a return of COVID cases even before Omicron in Europe. That is number one. Number two, many mid caps valuations have also corrected. As I highlighted, some of the names like Emphasis, Cyient, etc., etc. The valuations are now more palatable than where they were, let's say, 2-3 months back.
Okay, just wanted to ask you before we let you go, do you track any of these platform new age tech companies, whether it's, a Paytm, Nykaa, Zomato, anything that you like in that space?
Zomato is something which we track, and there we have been very positive on Zomato. Reason for that is the pricing power that Zomato has is being underestimated by the street at this juncture. Their ability to increase the delivery fee, their ability to increase the take rates is being constantly underestimated by the street at this juncture. And we strongly have reasons to believe that they'll turn profitable most likely towards the end of FY23 or FY24 at the latest, while street is still not believing that they'll be able to make profits at least till FY26 or FY27. So while growth, most of the analysts and investors covering Zomato are on the common ground in terms of growth, what we believe is that the company will turn profitable much earlier than what the street is expecting at this juncture. That will lead to a profit surprise, and that's where even valuations at which the stock is trading currently, if you look at around 4 rupees sort of earnings by FY24 to FY25, then probably we are talking about 55 times on a 2-year forward basis, which is where most of the consumer discretionary names traded. So we like Zomato due to that rationale.
Okay, Sudhir, we'll leave it there today. Thanks a lot for joining us. Have a good day and week. For now, by the way, just one look at the pre-open rates.